Right now, we talk about real estate matters that matter to you. My name is Jay Izzo, and we are live here from Linda Craft Team Studios in Raleigh, North Carolina, part of the Greater Research Triangle Park. Today's show is one that we do occasionally, but I've got somebody special to really help us out. And his name is Baxter Walker. He is a principal with Avison Yound Commercial. And we are doing a commercial show today. Now, you go, well, Jay, we talk a lot about residential real estate. Why are we talking about commercial? Well, here's the thing. The reason why we're talking about commercial is because commercial real estate does, in fact, affect residential real estate. How, you may ask? Well, that's why I brought Baxter in to help us understand it, but also help us understand what's going on in the commercial market, because the fact of the matter is that the commercial market is important to real estate, and we need to get some more information on that. So, ladies and gentlemen, please welcome Baxter Walker to Real Estate Right Now. Appreciate you coming in.
No, thank you. The honor's mine. Thank you, sir.
Well, we're just so privileged to have you here. So let's just get a few of the basics out of the way.
Sure.
What do we know right now? Where are we at with the commercial market in terms of what's selling? Where are we at? How stable is it? Because, the residential market, did this huge peak in 2021, right? Where, multiple offers were coming in, very different market. And then, of course, it's kind of stabilized now, or normalized, maybe is a better word. Mm-hmm. What has the commercial market done during this time period?
So what's been interesting is the commercial market tends to more steer like a battleship. It reacts a bit more slowly. However, those reactions are a little more long-term. So what has been interesting, particularly post-pandemic, is, which everybody's aware of, work from home and what the opportunity is with that. However, it's become a challenge for employers. So during that time when employees got a taste of working from home, during that time, it was a matter of coming back to the office due to different challenges because of pandemic and, health reasons. And now they got a taste of it. And so they definitely prefer that. And so majority of interviews is, what's my schedule? What's my flexibility of schedule? And so with leaders of a company or owners of a company, I've always had the policy or mindset, they 50% lead, 50% serve. It has become many more of the serving mindset, just how to cater to that. Because this market in particular, the Triangle, has always had a strong competition for talent. It is just hiring, it's very challenging. And so they added that element to it. So if you were to go back to the maybe early 2000s, we started to see that trend then too, because internet, the capacity with transferring files online, we started to see, particularly some of the software companies where people working from home, but then we also started to see the pullback. And so now we're starting to see the same thing, where some of the companies are forcing the pullback because they just see the more synergy when people are in person. There's certainly a value to a work from home, depending on where somebody's living. But there is that challenge. And so where we've seen that particularly affect on the residential, there may be more flexibility in terms of where people live as opposed to proximity of their workplace. So we have seen that, where particularly in this market where sprawls occurred a bit more. So it's certainly affected the office market. Large chunks of office space are taking usually a little bit bigger hit, because oftentimes those employers or those businesses might be based out of other cities or other areas where they're having to cater to multiple cities, multiple regions. And so the larger blocks have taken more of a hit. There's a lot of sublease space in the market, which will be interesting how those initial leases come to play and come to their end in the next year or so. That's going to be interesting. However, with that being said, there's parts of the market that couldn't be hotter.
Okay.
In 20 years I've been doing this, I've never seen the market so polarized between hot and cold.
What's the hottest part of the market right now?
It's what's been interesting and somewhat ironic is I'd say office condos have so like if somebody were to buy a small office space and purchasing that, we've seen values increase dramatically over the last year which was probably because they were stagnant for a while, so it was probably due for that to happen, just like on the residential market, what we've seen with with my counterparts on that side. So when we've sold those, there was one that I sold the end of last year where I had 2 offers before I even put it on the market. And
what kind of business? Excuse me.
Sure.
What kind of businesses are going into these office condos? Are you seeing? Are these entrepreneurial, or are they more small business, or is it that what, we got rid of the great big office suite and we've downsized because we don't have as many people coming in someplace? What are you seeing?
It is mostly the small business entrepreneurs that are doing this, and so which could venture into the attorney, CPA, financial planner, that segment, or into the medical type property, like counseling centers. They're blowing up, they're everywhere, those types of things. And so where folks have really seen a value of ownership, particularly in this market, and that's it's been interesting is how that buyer, in my opinion, that buyer has the same general mindset of a home buyer. And so where we saw the somewhat craziness of a couple of years ago, we did see that bleed over into the sense of urgency of buying a small office space.
Gotcha.
We saw that. And it's, and again, the challenge with some of this is, of course, interest rates, which fortunately they weren't raised yesterday. They were
they stable.
At least it's been great to see them lower, but but
what are we seeing average wise for interest rates in commercial in particular?
So I spoke to a couple of my resources, Tom Cox with Fidelity, Kelly Pill, she's with First Citizens, just because I want to kind of get a couple of opinions, and somewhere in that 6% to 7% range. And so
that's not bad. It's not really bad.
It's really not. And in my opinion, non-economist opinion, that's kind of a healthy, if you're at 3 or 4% with the way values increase, that's basically free money, which by the way was great when it was. Yeah, that was great.
It was great when we had it.
It was great. I certainly won't deny that. But a lot of my residential counterparts will say you basically date your interest rate and you could always refinance.
Right.
And so where there is that spread of 6 to 7% is typically if somebody's occupying as a business, called an owner occupant or an investor. Banks generally see an owner occupant space as being a little bit less of a risk because somebody's running their business in it. So they're going to pay their mortgage investments. You got a few layers there, which adds a little bit of a risk. So they add a point or two.
Right. So this is interesting because I did not know that the condo office unit was so hot. Our area is very entrepreneurial. We have a lot of entrepreneurs, so it makes sense in our area. Do talking to your colleagues nationwide, which I know you do, you've been doing this for 20 years, you've done over 1,500 transactions doing this, and you've worked with a lot of corporate relo in this time as well. Talking to your colleagues, are they experiencing across the country? Are they experiencing the same thing that you're seeing, or is it a little different, or does it seem to be location specific of what's hot and what's not?
I would say it is a bit location specific. There are certain areas of we are certainly blessed here. I grew up here, and so we've been growing up here ever since RTB basically first put its flag down, ever since in the 60s. So we've been growing steadily for decades, and I don't see that changing anytime soon. So we're certainly blessed here compared to some of our counterparts, like in New York, maybe parts of Chicago, California to a degree. But areas like Texas, Nashville, some certain areas, they are still growing rapidly, but we're always in the top of those lists for
we're always in the top 10, right? I mean, in terms of growth, we're always in the top 10. I think it's interesting that recently I read an article, and please correct me if the article's wrong, okay? Because I don't always believe everything I read. I think it was Abraham Lincoln who said you can't trust everything you read on the internet.
I think he did say that. I read that somewhere.
But there was an article that suggested that there was about, I may get this number wrong, about $1.5 trillion in commercial real estate loans that exist out in the U.S. and that a lot of them are going to come due pretty close to the same time. And I don't know if that's true. That's what I read. Is that what is the?
It's a big number, and
it's a huge number.
And there's the interesting thing with commercial, particularly how money's borrowed with it. It's, I think residential, you have a 30-year mortgage. You're safe for 30 years. Generally, in commercial, they may amortize for 20 years, but they have 5 or 7 year balloons. So every 5 or 7 years, the bank can say, this is a good partnership, or it's a good rate or not. So that being said, I'm hoping that in the next year or so, as these base leases expire, that we don't have a bit of a fallout when it comes to those areas. Again, we are blessed here, and we do have a bit of a filter when, whether it was the 08, 09 recession, which we really had a soft landing.
We really did.
Yeah. And it was really more things just paused.
Both sides.
Yes, sir.
Residential and commercial was pretty soft.
Yes, sir.
Landing.
Yes, sir.
Yeah.
I definitely agree. And it was, and that area, again, not being an economist, not being a mortgage expert per se, that probably needed some corrections there.
Sure.
However, as we kind of work through the next couple of years, that's going to be, there's a lot of larger buildings now. We have seen a slowdown in development of office, which again is something also we needed to there. And there's never a perfect vacancy. There's never a perfect amount of development. It always ebbs and flows. And that's the bit of correction that we needed.
Yeah. I think, again, people don't understand this connection of, commercial and residential. I think they have this idea that commercial real estate exists on its own, and it's its own entity, and it has nothing to do with anything else. No one is affected. As a homeowner, I'm certainly cannot be affected by what happens in commercial real estate.
Sure.
But nothing could be further from the truth, could it?
There are tight connections with it, and it has been for a while, and even so, and there's a few different reasons why. And so I worked with a company 10 years ago or so that the business owner said, it does not matter where I live, it matters where my employees live, and that's where I need to be, and that's where I need to be close proximity to. And they have a lot of employees lived in Southwest Wake County. We landed in Holly Springs. And so, and that is why. And so that's one aspect of it, just where people live. Forget about the work from home. Not every business allows work from home, because like if somebody's in flex space, somebody, whatever, which we can dive into that, but they've got to be there. So it doesn't apply to a lot of, or certainly not every user. So also when it comes to development, we always see a little bit of chicken and egg with residential developers and retail developers. Residential we don't want to build a bunch of houses there. There's no retail. Retail don't want to go down. There's not enough rooftops. And so at some point, somebody needs to pull the trigger.
Has to step up to it,
right. Yeah. And I was touring actually with a client in High Point. We were in High Point yesterday, and they were having generally the same issue. So the town had to really step up, and they built the baseball stadium just to create some more dynamics. So at some point when, at the end of the day, it all comes down to pricing. At some point, it just makes sense. And so that's where, like, if you think about, like, if you want to move somewhere, I used to be 5 minutes from a grocery store, and now I'm 20 minutes, so there is that connection.
Yeah.
And then we've also seen more of a, not just connection, but more competition when it comes to residential and commercial, particularly for large tracts of land for maybe industrial development, where residential developers are paying and investing top dollars into land that doesn't work for performa for an industrial development. And so that's been interesting. And sometimes the cities or the counties kind of have to pull in and say, really, what makes the most sense here? We need people, we need jobs. What's that balance? All these towns, they try to target a 70-30 split for their tax base, 70 residential, 30 commercial. Many of the towns around here, maybe Morrisville excluded, was way heavy on the residential side, where they weren't on the commercial. Commercial properties generally are a little less impact on the infrastructure, generally. than residential. So they like that balance, but it's always a balance. It's always a balancing act.
I think it's interesting that you brought up the chicken and egg problem, because this was something I was going to talk to you about. Was, what drives what? Is it commercial drives residential, or residential drives commercial? And
Yes.
so I'm glad you addressed
Yes.
it. Yeah, the answer is yes. The answer is yes on that one.
Mhm.
But I do, just as an example, where we live, they built the Harris Teeter a few years ago on Millbrook and Creedmoor Road,
Mhm.
right nearby where we live. And I went into that Harris Teeter and asked them, because it didn't exist there before. It was just trees and a business building there. And I asked because I knew they had these statistics. I asked the manager, I said, how many cars come here per day? And she said 2,500 come here per day. Now, before that was built, there was not 2,500 cars coming down that road today, right? And she said at holidays and weekends, it's 3,000 plus. On holidays, it can approach 4,000. What I don't think people understand is that in that commercial space, commercial drives traffic also started to create interest in other vacant properties up and down the road.
Sure.
Because there's conveniences that only come through commercial.
Mhm. Yes, and where commercial developer or a grocery anchor will be the first to take that leap.
Right.
And where then others will, okay, there's been density created, traffic's been rerouted. Bless the DOT for how they have to, just because all of a sudden something's done, then every guy gets rerouted. I was in a meeting with them recently, and every now and then I'll have heart-to-heart conversations with them about certain issues.
Sure.
However, one thing I like about this area, they always do generally seem to be in front of things. We don't really mainly have a traffic problem. Other areas, I won't say, but other cities really have traffic issues.
Yes.
So luckily I wasn't stuck in traffic this morning. I might be saying a different story, but it's generally we're in a good place.
I think so too.
So, but that being said, so all of a sudden, like you said, with the traffic count, all of a sudden vehicles are now going one direction,
right?
Because they need to go there either after work, before work, or whatever they're doing. And so then you'll see that happen. And then like when before Walgreens and Rite Aid merged, you would see them next to each other. One came first and the other one came, or you see a Lowe's and a Home Depot.
Right.
One came. So what's being created is density. So when I talk to clients and they express concern, well, my competition is like right nearby. It's like, well, they've created density. They've created a dynamic. You're just going to have to beat them on service.
Well, but you want that.
Mm-hmm. That's right.
I think that's what commercial. I think sometimes people go, I don't want to be near somebody that's doing something similar. Actually, you do.
Mm-hmm.
Right?
I agree.
Because your potential customer is already going there. Mm-hmm. So you're actually not really fighting as much as you think you are. You've already got an audience. Now, how can you improve against what they've done? So it's actually not a bad thing. It's why you can sometimes see in the same strip mall more than one jeweler.
Mm-hmm. And generally with that is geography. Once something's in place,
right,
it is what it is.
Yeah, right.
And
right,
it's tough to lose to a competitor that, whether they're on that side of the road, or they're on that side of town, or they're on that side of the county, whatever, because it kind of is what it is. Where if you're nearby, if your business is located nearby, okay, what can we do to improve our business, improve how we provide our service, whatever it is. And those are things we certainly can control.
Right. And
we've seen, like, talk about retail, we've seen a lot of medical go into retail centers. You used to not see that. Dentist offices were in a medical building, orthodontists were in a but now and this happened, I would say it started to happen more like 15 years ago or so, where we started to see this trend where they're in an out parcel of a shopping center, or where they see the retail visibility being an asset to their business.
Right.
And we saw that trend, and that, so if you go into majority of shopping centers, that particularly newer ones, that you see a lot of medical, and they do bring the traffic. And so with a lot of developers, they want a consumer ideally to come in and not just once. They want to
Right.
say, okay, you're stopping in this grocery anchor. Well, while you're here, you're going to order dinner here and then go in here and then go by and pick it up.
Mm.
And I remember going into a pizza place, and while my pizza was being done, dating myself, I'd go into Blockbuster and get a movie. And by the time I picked the movie, I'm not going to say VHS, by the time I picked the DVD, the pizza would be ready.
Right,
and
right,
so, but that's what retail developers, particularly, and with medical as well, they want somebody to do that. They want somebody to stop and get coffee, or they drop their kid off to get their teeth cleaned or fixed or whatever.
Right.
They're going down and shopping, whatever the case might be. So that's the ideal scenario.
So I'm going to change gears on you here a little bit. We had Paul Fitz here on a show, who is a mortgage lender, but he's also a mayoral candidate for mayor here in Raleigh. And we had talked about, and I'd love to get your thoughts on this. We had talked about taking vacant commercial space, because there's a need for more residential space, and turning it into residential space. Is that a trend that we could see more of, in terms of where we have vacancies in office space that could be converted into possible residential space? Is that, or what's your thoughts on that?
It's potential, and I generally like the thought process with that. The challenge, I always look at things as a SWOT analysis. So either the threat with that or weakness, whatever you want, whichever category you want to put it, is how the utilities are handled. So generally with office buildings, you have a core of bathrooms kind of in the middle, or maybe down a hallway, and being able to stretch that to individual units. Sometimes, not every time, can be cost prohibitive.
Sure.
Which is, at the end of the day, that's all we're talking about, is, just where to put people, how in less costly way possible. And that's where the challenge is. Sometimes it makes sense, sometimes it doesn't. And I would say we see that a little bit more in the major cities. If the opportunity presents itself here, I think that'd be great. That would be the hurdle.
Okay. All right. So we've almost done our time here. It's gone really fast, and this has been a lot of fun. I've just enjoyed this with you. This has been
likewise.
And there's so much more I want to cover, but I want to finish up with a question. One question here, and then have them tell you how they can reach you. What is the one thing you wish people knew about commercial real estate that they probably don't know, that you wish that you could? Hey, if I were to give you, I would say, I wish you knew this. This is what I wish you knew.
So oftentimes, we work with a lot of tenants, ours as well, but a lot of tenants. That's the majority of the market share of business movement in the area. And oftentimes because someone doesn't know where they can get assistance and partnership to navigate the process. With leasing, there are so many factors that can be negotiated. 99 times out of 100, if not more, property is going to have a listing agent on representing that landlord. So you could say it's like going to court without an attorney. It's going into the process without, whether it's me or somebody else, just have somebody help and work with it through you, because that is, once you sign a lease, you and the landlord are on opposite sides of the table when you're negotiating that lease. Once you're signed, that is a partnership for 5, 7, 10 years, however long. So that is a partnership. And there are so many opportunities to negotiate that may not be presented to a business that they can actually negotiate. And so working through that, and also the point of this is another point I want to get across, is I think anybody who has a business, particularly a small business, should always position it to be sold. They should always position, whether they want to do it a year from now or never, they should always position it that way. And in many ways, I've got a client I'm working with now that she positioned her business very well to sell it, very well. And that's through her business, mainly through how she's done her business, but also through her lease, with how the rates are, with extension options and so forth. So that becomes a big factor year to year as you're positioning your business to sell. So that is one thing to look at. But most important is have a commercial real estate professional partner with you to to find space to navigate the process.
Have representation.
Yes, sir.
Yeah,
Yes, sir.
right. I mean, there's a reason we have a broker's license, right?
Sure.
Right, so that we could represent,
Yep.
whether it's commercial or residentially.
Yep. And
Right.
a lot of it's baptism by fire. I've been around a while, doing this a while, which I don't like to call myself a veteran just yet, just with age.
I don't know. Yeah, I don't know, Baxter. You got 20 years and 1,500 transactions. I don't know. You're not a rookie, brother.
Yeah. I was wondering, when did this happen all of a sudden?
Right,
so, but I have been blessed to be in this. I've been blessed to work with a lot of clients, and I try to bring on clients that I can also learn from.
Right.
They're all very successful, and like one client I had, he always said, when you're referring somebody, like, say their name, don't say P, say J,
Right.
say their name,
Right.
give them that honor, I guess.
Right.
And so things like that I pick up on from clients, and it's been a lot of fun. I really enjoyed it. It's stressful, I won't lie, but it's, some days are better than others, and every day is basically an EKG. So yeah, but it's a lot of fun. I'm blessed to be able to do it.
So as we close here, tell people how they can reach you out there.
Sure. Well, again, with Avison Yound here, based in Raleigh. We're based out of Toronto, but we have an office here in Raleigh, and I can give Jay my contact information. And so love to, just at the very least, one thing we do like to talk to folks, even if they're not looking to move for 2 or 3 years, just to have a conversation to prepare, because it does take a while, and just to be prepared for the process when it comes up.
Awesome. I guess we'll put information on the blog post.
Yeah, that's fine.
To
I have emailed them, so my cell number is always the easiest way.
All right, awesome. And you'll give me that, and I'll put that down. We'll have that. Great. Folks, it's a show. I say to you every week, you know what? You had a lot of choices. You chose us. Thank you. Give us a positive review wherever you may be listening to the show. If you're watching us on DB, thank you DBTV. Thank you for watching us there. And folks, give us a thumbs up on YouTube as well. I say this to you everywhere else, and that is, you know what? Thank you so much, and ciao, everybody.